Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, June 24th, 2020. It's about 22 minutes before the market opens, 9:08 a.m. Eastern Time. And I just wanted to kind of do an update on the things I'm watching, and we'll stick to the major asset classes. This morning I made a point to get a post out a little bit earlier than usual because I saw some developments, and that's the whole point of doing this video. As far as swing trading goes in the broad market, that's been tough because we've been grinding around sideways. If time permitting, I'll get to that here in the video. But I wanted to start out with what is more conducive to trading, and it's right now a lot of things other than the broad market. Gold, for example, and silver. Been highlighting those on a daily basis, if not several times a day recently. And again, something changed since last night. We put in divergent highs, had some clear divergences and everything else. And so I wanted to talk about that, and also talk about the differences and why I like to focus on the futures as well as the ETFs on various asset classes, whether it's gold, silver, the indexes, other commodities, and things like that. All right, so well, let's loop back to this morning's post. So this was from earlier today. I started working on these about 2 hours before the market opened today, and mentioned that this was pretty significant and was worth noting. Again, that's that gold had rallied into at the time that about 1791-ish target, 1790. It's the top of this multi-month sideways range, a very well-defined trading range, very significant and obvious. So therefore, you had gold rallying into resistance, number one, not just resistance, but a pretty significant resistance level where it stopped at before. And then what I wanted to point out and update this morning. And you can always pan and zoom these charts when you're on the home page of Right Side of the Chart on the website. Of course, if you're on a mobile, you can pinch zoom, but on a computer, you can use the scroll wheel. And if you don't have that, you can use this zoom tool right up here. Click on that. But that's it. So we were at the resistance, and since yesterday we put in, we had some clear divergences. We had some confirmed divergences because you could see the PPO started to flatten out and turn back down here, and we put in a lower high, and so that's a clear, right here, I'll draw it out for you, clear bearish rising wedge pattern. It's a small one, so I don't at this point in time, I'm not expecting you move all the way back down to the bottom of the wedge. I still remain intermediate and longer term bullish on gold, but obviously we hit that resistance level, overbought with divergences, and as I said, a sell signal would come on a breakdown below the small bearish rising wedge pattern. So you can see I've drawn out what is a likely target if we have some downside in gold. And I'm going to tell you there's a couple reactions here. There's some minor support. Let's go to the live chart. That was from this morning. Again, that screenshot was taken a couple hours before the close today. And since then we got a sell signal. We broke down, and so this was an objective time to it was objective to book profits this morning at resistance, if that's your goal, if you're an active trader. If you're not a very active trader and you're long gold, if you anytime in here from this divergent low a couple weeks ago, that was a whipsaw signal, that was a buy signal. Again, that was all highlighted in the on that post earlier today. You can go down there. And sometimes I'll put a string of charts, and these won't show on the email notifications. It's a gallery format. You have multiple charts. You can just click the arrows, and it's kind of a neat visual to kind of see how technicals play out. The bear trap, false breakdown, the whipsaw, the recovery of the 1700 level, and then you hit the next, I'll highlight the next resistance level. Break above that would open the door for additional upside, that kind of thing. So there we were, starting to crack that level there. The breakout of that level was the catalyst for this next leg up. Back test there, offering another objective entry. The last subjective long entry that we had on gold before this final thrust up. That was a back test of that 1756 level. And then this was yesterday. So I was going here. Arrow breaks denote where a reaction is likely. That's why you don't have an arrow going through there. You come up to a big resistance level like that, you're likely to get at least another minor pullback or a consolidation before a breakout. So that was yesterday. And again, then today, like I said, updated as I just showed you the divergences. Now the big one was silver in that post this morning too. Silver has a nice clean wedge there. It had a nice rally off that divergent low and support around 17,258. Same thing as gold did. It had a little whipsaw here below that. You can see that well-defined support level right there, and put in a divergent low, and that was the technical catalyst or the fuel for this rally, along with the drop in the dollar. At least the dollar really kind of kicked in the midpoint here in the last leg up, but again, divergent high there. So I wanted to update that because shortly after that post, we did go on to break down, get that sell signal. Was pretty impulsive. Here's silver, and this, it shows you that the traders are watching the technicals, if nothing else. I'm willing to bet just about anything that this was not any type of news catalyst. It was just a technical breakdown of both gold and silver at the same moment broke their uptrend lines, the 60-minute bearish rising wedge patterns. The divergent high was kind of the tell, hey, heads up, there may be a trend change coming. And when you got that sell signal, that was a drop of this whole plunge from since that post was put out there was about a 3% drop in just one candlestick, one 60-minute candle. It was a matter of minutes, 10, 15, 20 minutes or so within there that silver broke down. So the point of this video is, where do we go from here? The point of the post earlier today was to give you a heads up. Hey, if you're long silver, if you're looking to maybe get a quick short trade, there's a sell signal. So a stop that would have at least helped protect profits a little, stop a little below that uptrend line. As I said there earlier today, minimum target 17,736. We had a momentum fueled overshoot. We're pretty much back there now, but we're a little bit below it. And as I like to say, support once taken out becomes resistance. So 17,736 was support. We sliced on through it in one fell swoop after the breakdown, and we back tested it. So this puts silver in a bearish near-term technical posture. I'm talking active trading stuff, and again, that's where I'm kind of in that mode now. Not in the broad markets. I've cut back on my trading on the major indexes. That won't last forever. They will begin to move and become more conducive to active trading. And there's some levels. I'll get to that in a second. But this is where you've had what I call kind of micro swing trades. Swing trades lasting just a few days to sometimes a few hours, depending on things like this. But they're your levels. And if silver can't recover 17,736, this is our next support. You know what? No, I'm going to give you one more as I'm doing the video, because there is I can see another support level right here. Yeah, that would be remiss not to point that out. Oh, and that's actually where we hit. I wasn't looking at today's lows, but that, of course, that's another reaction that helps validate it. What I was looking at, just kind of give you insight into my, how I come up with these levels. All these reactions here, reactions from above, a lot of reactions here, even reactions back here as well on that level. And that's what we hit right now. So that could be it. We had a small divergent high. Remember, we had a bigger divergent low recently, and this was a bigger breakout. We had this downtrend line here, so that was bullish. And what I'll do now too is extend that downtrend line, and you can see that we're pretty much back testing it once again. So here's where I'm going with this. That correction may be over. If you blink, you missed it. But we're at support now, back testing the trend line again, and we hit that support on what I call a brief momentum fueled overshoot. A lot of velocity or momentum coming in after the breakdown. It triggered a lot of sell orders, and we bounced off there. So near term, right now, where do we go? Hard to say. It was the divergences probably aren't going to play out for one 60-minute candle drop. It is possible, but I'm going to get to the broad markets in a second. I think that may come into play. So I am leaning towards a move back to come and back test that trend line at least. That's what I'm leaning towards right now. I'll let you know. Convictions aren't super high, so near term a little bit muddled, the near term outlook for silver. But again, I think that's most likely what we do there, and at the very least we should hold above today's lows on that spike low. Otherwise that's going to be bearish for silver. And gold, Like I said, gold had also the divergent high, the sell signal triggered, and there's a little bit of support right here, about to where we went right now. But what I'm gonna do is give you an alternative trend line too to watch now. That was the one I posted this morning, but now we have a second one formed. Why did I add that trend line? Well, earlier we had a cluster of reactions here and only one reaction here. Now we have three distinct areas of reactions right there. So there's a trend line to watch on gold. And gold could continue to work its way up now within this wedge, even extend these divergences and then have another correction. But the bigger picture on gold, that's all micro stuff. If you're an active trader and you like gaming a quick 1-2% move in gold, and if you're trading gold futures or silver futures especially, yeah, that's there's plenty of money to be made there on a 1 or 2 or 3% move like we had in silver today. But the bigger picture remains this multi-month trading range in gold, and a pullback here and even a little bit more would be healthy. You don't want to see, I don't like to see a breakout that comes on an extended run just to get there. In other words, a lot of energy was spent or fuel spent just to get gold from here to here. There was a little consolidation in between that helped, and then the breakout, but from this breakout here to there, a lot of energy spent. And so usually when that happens, when you're near-term overbought, rallying into resistance, you have a pullback. So the ideal scenario for gold, for the bullish scenario, would be a little more consolidation, work off all overbought conditions, burn through, let the divergences play out, and then go on to breakout. So that's it. So let's say near-term, cautiously bearish on gold, especially if we take this trend line, maybe move back down to here. That would be an objective long entry. Anything much below that, it doesn't wipe it out. It'll still keep gold in the trading range. I could give you another level right here too to watch, which I will, and that's why I do these videos. This is, should gold break below this 1750, 650-ish level, then look for support to come in around 1740 or so. And again, same thing on the dollar. Pointed out the dollar here at resistance, negative divergences. That was a catalyst for this drop in the dollar, which gave that final leg up, that boost in gold and silver we had into today's highs, the recent divergent highs, and then hit that 96,411 target, which I think may satisfy this whole wedge thing. So this is why I'm near term, kind of back, not as confident as where gold and silver go in the very near term. Kind of watching the dollar. Why? Because this move down here would satisfy, or roughly satisfy, the measured target for this wedge. If you take a rising wedge pattern, you take the widest part of the wedge, add that to the point at which a wedge breaks down, gives you a measured target, and so that's been hit. Now we bounced up. I said yesterday that where I expected a reaction, that's what we got. I had an arrow drawing showing you go down here, bounce to here, this resistance zone. So we've now bounced, and we could reverse here. We have to get through that resistance level. So near term, I drew the squiggles today. I'm not so sure. Certainly I expect a reaction here. We've already had one. If you zoom in real tight, you can see we've had multiple failures here on the 60-minute candle. 1, 2, 3 at the bottom of the resistance zone, and maybe give us a little uptrend line right there to watch. So if the dollar can power on up through here, lots of scenarios. PPO is still in bearish territory. Let's just watch that, and if it does, that's still resistance up there. But if we break down and we take out this low right here, and the dollar could easily take another leg down. So far as a corrective wave, after this drop here, that's not even a kickback rally. It's really just an A, B so far. Most corrections occur in an A, B, C wave, a 3-wave like that. We'll see. So like I said, leave it at that. My very near-term convictions. We got the breakdowns right now, and on gold and silver, which is near-term bearish, and again, could have played out for all that it's going to give us with these divergent highs, but I can also see more downside, and slightly leaning that way right now. And another update I posted on the homepage today is crude. Crude, been staying on this one lately, highlighting these divergences that have been building, negative divergences from this point to this point. Wash, rinse, repeat. You had a divergent high here. You had a nice tradable correction that didn't end until all was said and done with a divergent low, positive divergence. So This is swing trading right here. Swing the uptrends, swing the downtrends, go long, cover your shorts, swing the uptrends. And so we had a sell signal since yesterday's video. Crude did go on to trigger the sell signal on a breakdown of intersecting support, which is the uptrend line right there, and the 40.51 level. And it didn't just break down, but it backtested several times, providing multiple objective short entries after the initial breakdown. Finally ran down, hit my first target almost to the penny there, it looks like, 39.48, and so far the typical reaction, meaning a bounce. That was here posted this morning. Right here, crude first target hit, get a little bounce. That's expected, a reaction. Anything all the way up here to 40.51. I'm not sure. I don't think we'll get there. We could, and if we do, that's an objective area to add to a short position or initiate a new one if you didn't get the breakdown. If it came, in the middle of the night and you weren't, up or didn't have a sell stop order, you can set sell stop orders just like a stop loss order where you protect your position that you're long. If it goes below a certain price, you can do a buy stop or sell stop, which is an order if you don't have a position. And let's say you trade futures and you want to short crude if it breaks below 40.51, you can set a sell stop order at 40.49, whatever you want. If you get fancy with your broker, you can add conditions, maybe some volume conditions, things like that, and then that'll execute if and when that happens and get you into the position. So that's it. I just want to say now the bigger takeaway, is that this was a sell signal triggered. This came after a divergent high, just like we had the divergent high right here. That led to, back then, a nice drop in crude, and I don't think this is all we're going to get. Maybe we get a kickback rally. We'll see. If we go much above 40.51 and we backtest the trend line, that might provide an objective short entry if we get there. Hard to say. I don't favor that, but here's what I can tell you. Objective entry, next objective entry on a bounce back. And I wouldn't wait for 40.51. I'd short at 40.49, 40.48, 47, 46, somewhere a little below there, because all eyes are going to be watching that level, or a break there, or you can even shorten the midpoint, because I don't think we'll get all the way back there. That's kind of why I had that arrow going up here, going down. So again, that was this morning's chart, and as I do this video live, where is it? CL, where did we go here? Well, that was it. So that's about where I had the bounce going to these reactions. So I think it's close enough. I still think it's an objective short entry with a stop somewhere above that recent high that we got last night about 3 in the morning right there, and or a solid break, or really, pretty much any break below today's lows should do the trick. We already had the reaction off 39.48, so the next time we go down through there, especially a break down below it, clearly below it, should open the door for a move down here. I told you guys I would post a chart of or give you targets on USO, so let's do that. The futures chart, at least right now in crude, it's more clear to me. It's always going to give me more clues because you have virtual 24/7 trading around the clock, so you have a lot more candles, and that helps you define and see more support and resistance levels. Plus, crude is a little more sophisticated. There's a lot of institutional professional traders in crude. There are speculators, don't get me wrong, but you have airlines hedging up fuel costs, and I'm sure they've got people helping them with technical analysis and all that, trying to figure things out. Just a lot of it's crude oil. What else do I have to say? Very actively traded commodity. And on USO, you can see here I can draw this trend line, or I could tighten it up like that. I think that's the better fit. And there's our comparable breakdown to what I just showed you on CL. And here's some targets. You can just see those targets there. They're pretty clear. And a nice divergent high as well. Here, we'll zoom in a little tighter, and you can see here on the PPO. Here's your divergence line, and as well as the RSI down below. Last time we had a divergent high was a small one. It was right here, and it led to a small correction. But small and crude is still put a lot of money in your pocket. That was a 12% drop. It's just the nature of this beast. Crude, has been volatile lately, big price swings. So, we could be looking at easily I think from where we're at right now, not even the divergent high, down to this target. That's what I'd be eyeing, and that's about a 17% drop. If the stock market rolls over and starts to move lower, I'll get to that in a second, then I would increase the odds of this happening, that 17% drop down to that target level, substantially. And if you're not holding out for that much, even down here, that's about 6% from where we are, and down to the next target here, about 25.50, that's about a 10-11% drop. All right, so now let's talk the broad markets, and I think we'll wrap it up. I think that's all I wanted to cover. SPY, there's not a whole lot I can add that I haven't said recently. This is it. Well, let me just go to this one here. The big picture is we remain kind of locked in a trading range after those recent sell signals. We had the big sell signals given back here, initial drop, kickback rally that fell shy, failed to backfill the gap. It got into the gap. There's your gap right there, is what I'm talking about, but didn't backfill it, and we've been moving sideways. So like I've been saying, we need to break down. I still favor that scenario. These were pretty powerful sell signals. The market refuses to go down recently, but it's not going up either. And just respect whichever way it breaks, and also be ready for that. When you have these periods of consolidation, that's where you usually get some sharp moves. Once that battleground between bulls and bears, once the battle is won by either side, in other words, bulls break to the upside, that's bullish. Shorts will start to cover, more longs will step in. Likewise, if you break to the bottom of the range, usually you'll see the opposite. Shorts will be emboldened, they'll jump in, longs will stop out, and that's kind of how technical analysis works there. And here's QQQ. The bell just rang, so the market's now open. I was showing you pre-market trades earlier. They just toggled off. So what I'm going to do is, here's the trend line to watch right now, QQQ. It's a minor trend line, but it could do the trick. Remember, the Qs have been extremely resilient. I talked about the stark divergence or noticeable divergence lately with the equal weighted, or the SPY lagging behind, of course. It's the FANG stocks again. It's the same old thing, but even now, the journal even brought it up today. I mentioned recently, it's just been the FANGs lifting, not just the FANGs, mostly the FANGs and tech, those big stocks. So we're seeing, again, what's a concerning divergence or a deterioration in market breadth with fewer and fewer stocks doing the heavy lifting. So it is all about the Qs. When tech breaks, the market breaks. QQQ is a tech-heavy index. About half of it is weighted towards technology. And there it is. There's your divergent high, 60 minutes been diverging. These are little divergent highs. With little corrections, each one divergent high, correction, divergent high, correction, divergent high, correction. But what's happening here is all that while you've had little divergent highs here all along. Here, that line should be there. That shows you that divergent high up to that point. It's been in larger and larger divergences building. So one of these seemingly innocuous little divergent highs with a little correction, what may start out as a little correction, could prove to be a much larger one. As of now, the bid has been extremely resilient for the tech stocks, so it's not an aggressive all-in short moment. Even if you get the sell signal, depends on your trading style. You could take a full position or an aggressive position, but you just can't get married to it. You have to keep your stops relatively tight in case that proves to be just another little dip like these before the next leg up. All right, so that's that. PPO starting to curl back down, and let's look at the futures and we'll wrap it up. Because again, where the stock market goes will most likely affect that crude oil trade. I have higher confidence trading crude right now than the market, but if the stock market continues to hold up, then crude it can drop, and it might, but it most likely will give a headwind for a short trade on crude. Meaning making it more difficult, because crude tends to trade with the stock market based on economic expectations. And where was I going? Oh yeah, I wanted to show you the futures. Okay, this is S&P 500 futures. Same story as SPY. We had big sell signals back here. There was your 60-minute breakdown on the 60-minute trend line following the divergent high, big correction, ended with a divergent low. So the rally didn't come out of the blue. It was technically induced, big strong divergences on the 60-minute chart, trend line break, sharp rally. But since then, just smack sideways trading range. And now if you're an active trader, and you really look between the lines, there's a lot here. You can game. Here's a trend line that formed. We had a little whipsaw there, but then we broke out, back tested, and we're back testing again. So that's it. This is support at 30.84. a price support as well as a trend line support. That's what ES hit this morning. And the bottom of that range I just boxed in is not very well defined. You can see a reaction low there, one there, one there, one there. I don't know if that's a wonky candlestick or not, if that one counts. But either way, not a very well defined range. But with that being said, should we break that support and then take out this recent low here, then that should open the door, I believe, to a pretty swift drop there. Again, this can go that way. A lot can happen. You can have a false breakout. You just have to adjust and adapt. If you get a breakout to the upside, maybe it's a real deal. You can go long if that's which way you think the market's going to continue to build on those gains, and just don't get married to it. Put a stop there, especially if you get a a quick reversal and that proves to be a bear trap or a whipsaw signal. What would happen if we did get a breakout to the upside soon? Well, I'm going to draw some lines here that could come into play. Would look like this. This could be a divergent line. So here's a big resistance level right here. It was former support at that time, 31.75. So let's say you get an upside breakout. It would look like this. Breakout, pop a lot of stops on the shorts, clear them out. Some longs would pile in. You'd get a divergent high here. Again, if it happened anytime soon, it depends on if and when it happens, and that could set the stage for a big reversal. Now we may not even get there. So again, let's watch that, and then finally NQ. Let's look at the Nasdaq 100 future. Okay, here's what I'm looking at. NQ. Latest trend line right here, uptrend line, which was broken last night, earlier today. A little breakdown, back test right there, fell back and hit this 10.107.55-ish. Pretty decent resistance level. You had a reaction high here, big reaction high with a divergent high, correction after that, ran up, put another divergent high here, correction, broke out, back tested it, so there was a breakout and a back test. So this right now is a recent breakout, and if it fails, then that would be, of course, a failed breakout. So that's the level I'm watching right now. Bearish if we take out 10.107.55, especially considering the recent divergent high. But unless that happens, remember people can't get enough of the FANG stocks. The trend's been resilient, until and unless broken. So that's it. That would be your next objective short entry there. Solid breakdown below 10.107 or so. And for you small cap traders, you probably get a little more bang for your buck. Usually you do, trading the small caps. That's IWM, or you can use TNA, TCA, TWM. There's a ton of them out there. ETFs, leverage or non-leverage, that trade the small cap stocks or track the Russell 2000 small cap index. But here's what I'm watching. This triangle pattern. You have an uptrend line right there, which we're testing right now, and a downtrend line. So we're pinched between support and resistance. This is a symmetrical triangle pattern. Can go either way. Obviously, bearish, a downside break. You can see target 1, target 2 right here, and an upside break. Really don't have much resistance up here until about 1494. So favoring this scenario, but again, not married to it. And the indexes have been, with all I guess a lot of the Fed money that they've injected in the system, it's finding its way here for whatever reason. I'm seeing better easier trading opportunities in just about everything but the broad markets now. But I'm not giving up on those. If we break down and how it looks, we may get an opportunity there. But I'm not pretty much holding off on adding a lot of official trades now because the market's doing this. I'm highlighting what stands out. Aggressive trades in the ag input sector. Those, we have a lot of double digit gainers there. Some of the ones I highlighted. And then gold, of course, silver. There's been some quick trend trades, but with gold still within that trading range that I talked about here. It's just active trader stuff. Trend trader is going to just become frustrated when you're in a trading range that's going sideways for months. So a trend trader wants to see gold break out either to the upside or the downside. All right, let me wrap it up here. Get this video out to you guys. Those are the levels to watch today, and my thoughts on the metals and crude oil and in natural gas. I didn't cover, but I'm still watching that one as well. I should cover that. Still looking for with this divergent low, eyeing this one for a long entry, especially if it can get above this resistance zone here, which is about the top of that's about 181 or so on that gas. That is likely to trigger the next tradable swing trade there in nat gas futures. Or you might want to use UNG. I think I mentioned the other day that I believe D-gas and U-gas are being retired. So probably your best trading vehicle at this point in time for natural gas, if you don't trade futures, would be UNG. And here's haven't marked the chart up in a while, but you can see divergent low right here is what I'm doing, showing a divergent low. That one never failed. That one failed to materialize, or at least for a rally, at a little whipsaw. Not even a super well-defined trend line either. But here it is, another divergent low. And I'd have to mark targets up for you, but I would just say if you're looking for at least a minimum target right there, 1087, and that would be, again, we don't have a buy signal, I have to be clear on that, but if we get one, or if you want to start layering in, sometimes I'll start scaling in to natural gas. In fact, I did this morning. Took my first starter position, small position, nat gas futures, and I'll give it a little room or add to it. Only plan to add to it on strength at this point. I will not average down. I'll only average up. And that's about a 10.5% gain on UNG up to that 1087, 1090-ish level if and when it gets there. All right, let me wrap it up here, get out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.